The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. I think we're honored to have a guest on immediately. Steve Bang, are you with us?
John, I'm here. Good morning.
Wow, thanks for getting up so early in Chicago.
Particularly on St. Patrick's Day, John.
Oh, that's true. You're, well, is it the night before or today? What's the story? What's the big bombshell of consumption of alcohol in that town?
Well, that was actually last week, but just because it is falling on a Friday, I'm sure it's going to be a little bit of activity downtown too. And as you can see, I'm wearing a green sweater, so I'm celebrating my Irish relationships here.
Is that matching the river properly now?
That was
or
last
did they already
week,
do that?
yes,
Did they?
Was at the time.
Why did they do it last week? I mean, what was
they always do it. They always do it on the Friday before the holiday.
Okay, I couldn't remember that. Got it.
But
Cool.
I mean, since it's on a Friday this week, so I think it's basically an excuse to celebrate it twice every couple of years. That's what it comes down to.
Yeah, exactly.
I mean, honestly, obviously it's today, right? So why have it on a Friday? Or they always want to do it on the Saturday before the Friday. So
Another good excuse. I like it.
Yeah.
Well, hey, what's on your mind this morning? We got a lot we can cover. I've actually got a chart that you sent me earlier. If you want to start with that one, or do you want to just kind of start with this FXCM thing we were kind of going over yesterday? I think.
No, let's take a quick look at the chart.
Okay. And what are we looking at here?
So I don't know if you recall, but the last time I was on the show, I said that I would be a buyer of European stocks and a seller of American stocks.
Yes.
And the reasoning was that there has been a significant degree of political uncertainty, as well as uncertainty originating out of the European Central Bank meeting, which had produced a de facto underperformance of European stocks versus American stocks. And in between, we have had the Dutch election, which went a little bit better than expected. The right-wing populist didn't perform as well as it was thought at the time. So consequently, European stocks, and that's what we are seeing here. So it's, I think we go back 5 days on the chart right now, and the red line is the performance of the European stocks, the Euro Stoxx 50, and the line underneath is the performance of the S&P. And I can't really see it because my eyes are not that good anymore. But I think the European stocks outperformed the American stocks by about 3% since. Right, that's the number.
I see that. Yeah.
Can you read that? What is that? 3.9? What is it? 3.7?
I think 3.6 or 7. I think this morning.
All right. Okay. Yeah. So let's say it's a solid 3%, and I think that we're going to have another situation coming up which might produce a similar trade, which is the French election. The French election are happening April 20th, and obviously we're a little bit away from it. But
and that would be a bet on what? Like, what would be the trigger there?
Le Pen. So French version of the right-wing populist anti-European is Le Pen, and if she were to lose, or if she wouldn't have a strong showing, I think we would see significant upward move across European stock markets.
Got it. Well, even a widening of what we're looking at right here, or just basically based on the CAC 40 type situation. What do you think?
Well, I mean, if you want to go, you can obviously do the CAC 40 in itself, which would actually most probably produce a better result.
Right.
But I mean,
what's the downside on that one? Could that? I mean, what would be the? I mean, there's no free trade out there, as you and I know. So what would be?
Yeah, I mean, I think the downside really is the that it might fall back to 3% we just witnessed over the past week. I think that would be the downside.
Okay. And the way to play that possibly is because, people are out there going, okay, well, that seems logical. How do I take advantage of it strategy wise?
Well, I think you just want to sell SPY short, like when you play stocks, SPY short, and take one of the European ETFs, the Stocks 50 ETF. I think it's FEZ, and short it.
Okay.
Pretty simple.
That's about as simple as it gets.
Yeah, value on a value basis 1-to-1. So
right. So people with an account that can encompass both of those, and there's no margin relief on something like that, or is there?
No, there is actually. There is.
There is?
Kind of it depends a little bit on the type of account you have.
Okay.
But a lot of your viewers will most probably have portfolio margin account.
Okay.
And in a portfolio margin account, I think you only get value about 10% of the actual trade, the actual monetary requirement of the trade.
Okay. And they recognize this as a spread trade almost, or?
Yes.
Okay.
Because in the portfolio margin accounts they do. And I mean, there's another thing going on in the U.S. stock market. I don't know if you can pull up the SPY.
I can pull up the SPY. I can pull up the S&P futures. Would you like the SPY, or is this good enough?
Let's see here. I prefer the SPY just because I can look at it. That's the one I use. But
okay. All right. Let's take a look at it. Now, this is not, encompassing any type of overnight activity when we look at the profiles, but I think we're pretty much in the same wheelhouse as, where the profiles are on this one relative to the futures, which does encompass that overnight activity. So, which used to, you really would almost want to throw out the overnight activity, but this day and time, man, God, this is like 24 hours rock and roll. So
I do agree with that. Yeah, I do agree with that.
All right, so I've got the SPY up right now.
All right, so
what time frame would you like to look at?
If you go back, just daily. If you go back, like, I don't know, what is it, 20 days? That should be all that's needed.
Here's weekly. You probably got a little delay of seeing this because they always delay things in case I say something stupid. They can chop off the show.
This one is good. This one is good.
All right.
All right. So SPY's made all-time highs about, let's say 20 days ago. The actual date was, let's see here.
Well, this is weekly, so...
Yeah, the actual day was March 1st. And in reaction to the Fed rate hike, the market obviously made another jump forward and was unable to close or penetrate that old historical high. And if you look at it on a daily chart, I know that you love your weeklies, right?
Well, let me pull up the daily. Here we go. All right. There we go. You probably see it in a second.
All right. So if you look at it on a daily
Tell you
chart,
what, Steve, we've got to take the first break already. Could you hang tight?
Yes, I will go and get some coffee.
Great. Thanks. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Steve, are you there?
I'm still here, John.
Great. Hope you got some good coffee.
I
think
did.
I think we've got a caller from on the line here. So can we take his call and do some instant analysis and then get back to what we were talking
John,
about?
it's your show. Go ahead.
I forgot. Victor, are you there?
Yeah, how you doing? I'm just checking in with two stocks because I'm like anxious to nibble on them, but I don't want to get burned.
Okay.
Yeah, Diamond Offshore, DO, it hit a low. The earnings came out. They weren't that great. Should I touch that? Another one's Rig. I know they have a lot. I don't know if their money's to do with international or whatever. They just look really cheap. Are they cheap for a reason? And are they gaining a base? What's going on with DO? You remember you told me not to touch it when their earnings came out? They were like 17, and now they hit a low, a 52-week low Tuesday at 14.5, and now they're bouncing off.
Yeah, I mean, I'm gonna. Can we talk about crude first, because these are obviously kind of crude related.
Oh yeah. Crude's going to keep on going lower, right? That's right.
Well, right now, I've got the weekly up. I mean, I was kind of bullish on crude until we had the technical break back in the balanced area, Steve, below 52.43 on the weekly here. But we talked yesterday about, if crude can kind of get a weekly close, today's Friday, above this unfair low back in the box, Steve. I think, if I remember correctly, I think it was you saying that we might just kind of edge lower on crude for a while, or I can't remember.
Are you asking Victor? Or
I'm asking you. I'm actually asking you. Or do you have an opinion on this?
Yeah, I mean, I personally think that crude is going to get lower. Yes, I do. I don't really think there's significant upside at this point.
Well, Victor, that being said, I mean, that's why I was saying let's get some confirmation here, at least get a weekly close back in the. I mean, I kind of like this reversal action here, but I think the spine's kind of been broken on crude. I think a lot of these stocks, like you're referring to, I mean, here's the daily on crude. It just kind of went back and finished, kind of doing the. Kind of explore the fair auction on the daily here. The weekly close is going to be a big deal, but a lot of these stocks, I'm going to pull up the XLE really quick. we got down to the bottom of the profile on the weekly, pretty close to it, and just kind of wanted to get away from it really quick. And that's good news. Along with the crude trying to close back up in the balance area, a lot of people are bearish on crude right now. And I obviously heard Steve's comments, but the Diamond Offshore situation, I thought it was kind of a crapshoot before when you called, but we still look pretty bearish here. So crude may not be finished going down, and then also Diamond Offshore. If you're looking at my screen here, all we did was close, kind of technical damage on the long term, and then go back and kind of retrace back up into 1591. I mean, I don't know if it's things that have to happen are the weekly close on the crude above that 48 and some change number, and also Diamond Offshore. It would be probably pretty prudent to wait until we got a weekly close above 1591. Otherwise, I mean, these things this isn't the darling of the XLE. I mean,
I'm just looking at the book. The book share is 27.34 and has cash of $1.14, so it has some value eventually, right?
Yeah.
On the share.
Sometimes though, I mean, like market sentiment. I mean, you kind of got to throw some of those things out the window. I hear what you're saying about the mathematics of it. Rig, on the other hand, looks a little bit more attractive. 1212 is a great kind of place to kind of orient stops when it comes to rig as I look at it. But again, crude could just kind of drag everything down.
Rig has a gap at 11 though, so it has to. Once it fills that gap, I was going to buy it. It has a gap at 11 there. It should probably close it, and then it might be a clean. Otherwise, eventually that gap has to get closed at 11.
Yeah, I hear you. I mean, it's just kind of a wait and see on crude a little bit too, because if that really looks ugly, a lot of these stocks are just going to sympathetically.
They're going to follow oil, and so if oil stays low for the whole year, which it should, you know what I mean? Because oil only goes up every 20 years, like in the 70s and the 90s. They create these wars, and fear mongers and all that. So then these stocks are going to do really bad.
Well, I mean, these two particular stocks have not really held up very well lately, so you kind of got that. Also not in your favor to go long. So, well, Victor,
so I'm just gonna watch then. I'm not gonna touch it, man. There's better things out there, I guess.
Yeah, you know what? That's kind of what I was gonna say.
But I can't find anything better. What's better? Everything's overpriced. The whole market's overvalued.
Well, I tell you what. On that note, let's take a look at something that might find something better. Which
find me something, because I got a lot of cash. Well, I guess the cash is king right now, but whatever. Your 5 stocks can't keep on going up. Apple, Amazon, and all those. You know what I mean? You know what I mean? They're holding up the whole market.
Yeah, I hear you.
Right.
Well, listen. Thanks for calling in today.
Good deals. All right, thank you. Bye.
Okay, man. Okay. All right, Steve. Let's go back to some things we were talking about. What would you like to? Okay, well, we looked at this S&P versus the FEZ earlier. You were pretty much spot on that spread trade, and we talked about if you got a portfolio margin account, that's pretty low margin to get involved in a spread trade like
I mean, obviously, let's say on the margins or as a return on margin, 3%. Equals whatever, let's say 30%, if you look at it against the margin utilization. And as I said, I mean, the trade is over for the moment, but I think there's another one shaping up around the French election, April 20th.
Correct.
All right. So, but if you look at the S&P for a moment, just because we talked about it before you went on break.
Mm-hmm. Yeah,
since the S&P...
Let me get that back up.
Setting up really, really nicely for potential trade, because it has made this kind of like double top up there back to March 1st, and then right after the rate announcement. So it failed to make a new high, and you have an exact point where the consolidation pattern would be broken, which is about 235.60, 235.70 in the spiders, in the SPY. And you have this very fairly constrained limited range right now, and if it were to break to the downside, for the first time in a long time, I actually think you might have a sell. I'm not suggesting that the market's going to fall out of bed here, but
Well, think
Think
how
how
many
spot now we can pick a loser.
think how many things are priced in already too. I mean, the market's priced in all these things coming true that have, I guess that are in the pipeline. So how much more good news can the market digest and actually move higher on? I hear what you're saying. I mean, but the rate thing's over with. That's incorporated. Like you said, no new highs on that. And then, the budget thing came out last night, which has just completely decimated some folks on the left. And all these things are market like appetites that. Excuse me. Let's go to the break and we'll come back. Can you hang on?
Yes.
Okay. Thanks. Okay.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We've got Steve Banger on with us today, and we were kind of talking about the trade right now and how what you said earlier, which was we kind of failed new highs, the rate hike, a lot of things are factored in, and there might be a good trade on right now, possibly for a pullback, I guess is what you're saying.
Yeah, I think I wouldn't touch it from the long side right now. And one of my favorite groups, which I have been bullish on for a very long time, were the banks. financial stocks, but banks really. And they haven't been acting that well after the rate hike. If you pull up like a bank ETF, you can see that it is actually pretty weak and really didn't gain any traction based upon the rate hike. So that is the other thing which kind of like freaks me out a little bit right now. I mean, freaking out is the wrong word. That's a strong word, but so that raises my my blood pressure.
Right. Well, I get freaked out if I get a hangnail these days. So I mean, I know what you're saying. The XLF looks like it. You know, it just really hasn't shown any happiness based on what's happened lately.
Yeah. Also, if you look at the like a pharma ETF,
a farmer ETF,
I mean, like any type of pharma ETF, yeah,
okay,
like medical.
Oh, okay. Pharma. I thought you said pharma. I was like, out in the field type farmer. No, I got you.
That's because of a Chicago accent, John.
Right.
Right.
Yes, your accent is definitely a Chicago accent.
Anyhow, so if you look at it, the market did make quite a nice leap after the GOP announced their version of, let's call it Obamacare, or how medical care would look after they were going to rescind Obamacare.
This is one of our favorite trades here. I'm looking at the daily and the XLV. I don't know if you can catch up. That's on a little bit of a delay, but yeah, keep going.
So, and obviously the market really kind of like popped subsequently to it immediately. But even the XLV, I mean, has failed to make new highs. It didn't break convincingly through the old highs. So, I mean, and the good news is out, right? So I don't really know that even that sector will be able to carry the market any further at this point.
I hear you. Things are just getting tired.
That's how it looks to me a little bit right now. Yes.
Right. Let's take a look at gold, because gold did one of these. You know, I mean, it was really just kind of, with the rate hike really helped this. It just kind of gave the reason for it to go up. But we came down in support. We were talking about blocking out the short side on this trade for a long time until we kind of broken and closed on the weekly below 1236. Then we went back and retraced up into that inflection point, top of the profile. We're kind of, found a reason at that whole number area at 1200 to buy this again. And then yesterday we talked about the targets would be on that trade, which are, again, 35 cents an ounce move pretty quickly this week was awesome. But we reached high at 1234, got very close to that 1235 unfair high, 1235.60. And now we're just kind of hovering below it. So it was a nice way to look at a high risk reward scenario on gold, because you've got stops relative to 1200 based on your appetite for risk, and then your targets up top are going to be 1235, 1236. So which brings me to, and I'm showing this right now. Well, let's finish about gold, and then we'll talk about the risk reward beta section of the scanner, which we both love. What's your thoughts on gold here? I mean, is it just kind of played out right now?
Gold to me is a little bit of it's kind of like buy the rumor, sell the fact play right now, or it has been, which is also true for the bond market and to some degree for the energy market. Also, markets kind of like almost reacted counterintuitively to the rate hike. So I wouldn't touch any of those markets right now, because in general terms, I'm bearish on crude, I'm bearish on bonds, and gold I'm a little bit indifferent, and all three actually rallied after the rate hike, and I believe you have to look at those three in conjunction. So out of the three, I like gold the most, but I wouldn't necessarily be an aggressive buyer of gold here at this point, but gold actually does look the best to me.
Right. So gold right now has kind of done what it was supposed to do in the past couple of days, reached its targets, and now it's kind of a wait and see, because it's not worth trying to short against this 1235, 1236 is what we're seeing. And, if we can get a weekly close above that 1235, 1236, that would kind of possibly put it in the long camp again. But right now, you got short-term support at 1217 and a pretty big barrier to get through at 1235, 1236. So, all right, so let's just talk briefly about the 30-year and the 10-year. We kind of sloughed off a little bit there and kind of rallied back and kissed that 148.29 area after the rate hike. So is this something that, we can kind of use that as a big berry to lean on the short side? Does this have any hope whatsoever of just rallying? And would the market coming off in that trade you talked about earlier just cause these to kind of, empathetically kind of move up? And is it riskier to try to short the treasuries right now?
I don't know that it's any riskier to short them, but I would not want to be long, if that makes sense. I just don't. I just think the interest cycle has turned, and any significant strengths in treasuries will need to be sold. I don't know that the pullback we have had over the past few days amounts to significant pullback yet. Like another, let's say, another 2% to the upside would make me feel better to set up a short. But in general terms, it's not a buy, in my opinion.
Got it. Well, can we switch gears to something that we've been looking at here, which actually they're working on the back end right now? I'm showing this on the screen. So this is our new scanner. Obviously, I've been flashing this periodically on the show, and I think we're pretty good to go with this thing. Actually, let's see here. One of the programs is telling me something as we're speaking. But Steve, can you go through kind of some of the definitions of this matrix section? Because this is something that we've actually worked on together.
Yeah.
And can you explain a couple of things that are going on here with this 50-day beta, custom beta, risk reward, entry stop, which is basically just I don't know if you have the latest version of this. We've been kind of baiting it back and forth with the programmers, but can you just give the premise of what this part of the scanner allows for? Okay.
I mean, obviously, you can always debate markets, whether they go up or down, like politics, right? I mean, at the end of the day, it comes down to as much personal preference and how you read a chart. And at the end of the day, whatever you read into the chart today doesn't necessarily mean that the market is going to make a 30% move as it relates to underlying stocks, because for an underlying stock to make a 30% move, the fundamentals have to play out accordingly. So what the scanner does is, and here comes the break, I guess.
Great prelude, but can you hang on until we can get through another break, and we'll just get right into this?
Sure.
Cool. Thanks. Be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and we've got Steve Banger on with us in Chicago today. Steve, I am showing a new part of the scanner here.
Yes.
I don't know if you can see this yet, but so one of the can you walk through possibly what some of the components are here and why they're important?
Yes. So, and what I was saying earlier is basically to make a long-term prognosis on a stock is really always a fundamental call. So what we are doing in the scanner is we are looking at a trade setup which is derived out of the analysis strategies you have developed, John. And from there, we actually look at the volatility environment of the stock vis-a-vis the overall market. And we use that environment and the entry price and the stop price to calculate a specific risk-reward ratio on each and every single setup. Mm-hmm. And because each trade has a different risk-reward ratio, each opportunity has a unique characteristic, which is expressed numerically. And by definition, a trade which has a risk-reward ratio of, let's say, 2-to-1 is a much worse trade than a setup which has a risk-reward opportunity of 10-to-1. And what that scanner will do from here on out is that it will really deliver opportunities with a specific risk-reward profile, which if the client or if we hit it on a consistent basis, should really be a money-making machine. I honestly think it's basically the best tool out there right now. I've not seen anything like that before, and I'm proud and excited to be involved in it. And I think, John, you have done a kick-ass job with it. I think it is heads and shoulders over everything else out there. It's a bomb. That's really how I feel about it.
I think the programmers have done a good job with this. I want to walk through some of the things that people have access to. The custom beta, they're kind of working on something for this right now, but some of these columns that you're seeing, so you got entry stop, which is based, and target, really, that is a known target that we're not showing here, based on kind of a 13-week average true range, or the other side of the profile. So those are the two kind of target rich environments, which we feel like if a breakout's happening, you're talking about pretty much a weekly true range breakout potential. So the other target is based on the other side of the profile. So when you look at, you got risk reward based on entry stop and that perceived target, either one of those targets, and then you've got the average, the beta for the last 50 days, or the last 50 days. Then you've got a custom beta that you can actually change with this particular dial up here, which is actually not working this second, but again, we're trying to get this out to you guys today with the correct build. and then you've got a beta difference. So do you want to explain what the edge is in kind of utilizing some of these columns?
Yeah, I mean, so what the scanner really does is it analyzes the opportunity within the volatility environment of the stock first of all. And if you look at the first trade, CXO, so it's a long entry at 129.90, and the stop is supposed to be at 129.13. And based upon the volatility environment of the stock, it should be a 22-to-1 risk-reward ratio.
Right, so this is a combination of some daily and weekly information to get kind of really good, powerful long-term setups, which you can day trade or, swing trade. But
yeah, I think swing trade is really the better way to look at it, right? I don't think it's a day trading system.
Right, but as we talk about on this show all the time, and again, this custom beta is not working this second. We're making some final adjustments there, but it allows you to see also, does the stock normally act with the market relative to its 50-day beta, or does it overreact to the market, or does it underreact to the market? And then also what your beta look back period is for recent activity in the stock relative to that long-term kind of 50-day beta. So then you've got a beta difference. Is it something that, if you want to explain a little bit about that, Steve, I'll let you kind of do that, why that's important.
Sure. So if you look at individual stocks, they always swing around, but for the most part, they really swing around with the market. It's just the matter of the fact is that a rising tide lifts all boats, and that's what happens in the stock market. So a lot of times you get buy entries into stocks which are really a reflection of that the market is going up. So it's not a reflection of that the market is going down and the stock is going up, which might be a great opportunity. It's just that the market is going down and the stock is going down, and everybody says, okay, the stock is a bad apple, but that's not necessarily the case. So by having the ability to focus on the movement of the stock vis-a-vis the overall market, you can actually screen for stocks which show relative strengths over and above the market, or relative weakness over and above the market when you are looking for sales. And that, I think, is a very, very powerful analytics tool, because you are then for the first time really able to zoom in on those stocks which are moving independently of the market.
Right. So you can sort these in quite a few different ways. I just happen to have it sorted by maximum risk reward right now. And again, yes. It's just telling the program about this custom beta field. But for instance, on a situation like this where, we've pretty much got the internals still looking okay here as far as longs go. And I hear what you were saying earlier about, just some kind of underperformance lately based on everything else, and we might have a pullback. You could basically block out the long side within all the opportunities, the custom opportunities that we have in the scanner, and basically just look for short opportunities if you feel like, that's the case from what we talked about earlier. And then blocking out the long side and just basically picking the highest risk reward opportunities on the short side.
Yeah, absolutely. So, absolutely. If the market is a neutral pattern, you don't really know what it's going to go. You can do either or. You can trade the long side or the short side. But if you feel the market is on its way down, that thing will deliver 10-to-1 winners on the short side day in, day out.
Right.
A lot of stuff has to go wrong before you start losing money if you trade 10-to-1 risk-reward ratio setups.
Right.
And what is important to realize is that we are only looking at a 1-week range, and we average the 13-week range out. So we're only looking at 1-week range as to our risk-reward calculation. Once you're in those stocks, some of these stocks are going to catch a trend, and all of a sudden you're going to have the 20 or 30% mover in there. So you're going to make much, much more than that initial 10-to-1 ratio.
Right.
Just by following the market with a stop. But as it relates to the actual setup, the application is the killer now.
Steve, thanks for coming on today. It's been awesome. We're going to get through one more break, but I'll talk to you a little bit later. Thanks so much. Hey guys, right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and that was awesome having Steve on as usual. And we are changing something in the back end right now on this custom beta. We had it working earlier, but one more adjustment. So basically, this is an opportunity finder on steroids, and you can always go in the scanner and in the normal mode here, look at all the different time frames and what's setting up for profiles, do your manual sorts, whatever. But that's kind of a really nice feature in my mind that we put into this upgrade of the scanner, and this is very cool in my opinion. You always get your things here on the right if you're just kind of surfing through some stocks here too. So let's finish up with and by the way, we turned back on real time for U.S. stocks and all the other ones. So sorry that was delayed for about a week or so there while we were adjusting all these things. So let's wrap up a couple of things here. Let's look at the utilities really quick. This is one where we're pretty high on that buy point at 50.59, that takeoff at 51.64. We talked about let's just kind of wait and see now at this stage. Obviously this has been coming off. This is a rate sensitive sector without question, and it was amazing how it was holding up when some of the rates were going up. So that's where that was a buy point. But right now, kind of the trade's off. It's kind of a wait and see on a lot of things right now. Let's take a look at the dollar. This is kind of getting close to the 99.63 area that we talked about. We'd probably revisit at some point. It was a little bit of a pain up there. I got stopped out twice as this thing was edging up. But as we have come off, I don't think we've completed this cycle. And I actually think we could, maybe not this week, but get a weekly close below 99.63, 64. And then that's just going to be pretty awful for some guys who have been banking on this dollar heading higher. I'm kind of with Tom on that one. Not kind of. I'm all in with Tom on that one, actually. Let's take a look at the S&Ps. No comments on the scanner from the den, huh? All right, here we go. So S&P's looking, you know, we like considering what we talked about before. We still want to get some confirmations on even looking at this from the short side. So again, the big numbers, 2371, just getting below there would be a nice vote of confidence for looking at that in that way that Steve was just talking about. And going into China, this thing actually came off, which, man, stopped me out below 34.55 on that one. Just had a pretty big pullback today, actually. So some things globally starting to look a little weaker all of a sudden. And again, you know, what can make these things go higher now? Let's take a look at Apple. Let's see. So again, still no reason to short this. Just keeping the Apple watch here going. Still no reason to short it. Tesla, pretty big volatile day yesterday. There's that weekly. This has gone way past what I thought it was going to do on a little bit of a bounce here, and that's why it's great to let the market come to you. Still didn't get us in trouble trying to short it because we never got below 241.53. And let's take a look at my favorite company that makes no money. Here we go. Twitter. All right, so new profile's been put in force here. You might have a trading opportunity getting back up into 1552, stops with 1506, but that's it. It's a real cheap little trade. Make sure you put your stops in. Guys, stay tuned for Larry. You will thoroughly enjoy it. And have a good day trading and a great weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.